Oliver, good to see you again. So is there a screen that you can use to emphasize needs over wants?
Well, what we're thinking about is consumers are really gravitating towards essentials. So it is all about needs, and needs in particular, food, essentials, grocery. Even beauty is considered an essential good, and Ulta is a great example there. At Walmart, we like the grocery exposure, and this company is benefiting from inflation. What we look for ahead is disinflation. We're worried about warmer weather. We're also worried about student loan exposure. So there are puts and takes to the consumer. Keep in mind, on the positive side, there's a tight labor market. There's $700 billion on the sidelines. However, delinquencies are going up. So many cross currents. Bottom line is needs over wants.
Any parent who's helping their kid get ready for the year has been in the shoe buying business, which continues to be really traumatic. I mean, depending on what chart you look at. How are you thinking about some of those names?
Yeah, as we think about promotional levels generally are normalizing. Lower promos, though, in footwear and higher promotions in apparel. Apparel has been a more promotional category. Also, aspirational luxury, entry price luxury, such as $200 to $600, that's been under pressure, too. So our call here is really thinking about these essentials and market share leaders as well. And consumers are definitely looking for value. They're also shopping later, so it's a stretched out holiday season as well.
I don't get, Oliver, how your Kohl's pick fits into the needs over wants priorities.
Yeah, what we're excited
right now
about,
from the consumer.
Sarah, Kohl's is a new CEO, and that new CEO is specifically making lots of great changes in terms of moving cash registers that weren't used, adding gifting, focusing on opening price points. And also, Sarah, keep in mind Sephora, the beauty retailer, has a big presence in Kohl's as well. So that's the story there. There is a management change there, and we're looking forward to these differences, as well as this company getting into new categories, such as home decor and pets. Those have been very popular, relevant categories, too.
So it's a turnaround play for you, because I haven't heard much from the new CEO, so I'm interested that you're interested in it.
Yeah, he has a background from off-price, from Burlington, as well as traditional department stores. And he's going to really leverage that to drive more speed. Kohl's already has a very nice free cash flow yield. It's off-mall. And keep in mind, they have partnerships with Amazon, Under Armour, Nike, some very good brands in this store. And it is a return to the store this year as well. We're seeing encouraging traffic at most retailers. That's a big positive for physical retail.
I was also wondering about it because of all the warnings that we got from the Macy's and Nordstrom on consumer credit and rising delinquencies going into the fall, when we are going to see the resumption of these student loan payments. It seems like a tricky mix.
Yeah, Sarah, there's a lot of caution here. A lot of people don't know how much they owe, for starters, or who to pay to. The positive thing is your credit won't be impacted for a year, so we're watching that. But on average, the exposure across our sector is about 15 to 20%, and it is higher at Ulta and Target. So these are main caution points, and it's been embedded in cautious guidance as well. So you really have to be careful, and you really have to think about a consumer who's shopping for what they need, whether that be beauty products as well, essentials, food, or turnaround stories such as Kohl's.
Oliver, do you think concerns about student loan repayments are overstated or are well-grounded?
Yeah, I think there's a lot to be determined. I think there is cautious optimism in terms of how companies issued guidance. They're well aware of their consumer exposure here, but we really don't know how the consumers will behave because there's many complications to even knowing who to pay, how much to pay, and when to pay. That will add some caution in addition to the warmer weather. The good thing about the situation in retail, inventories are running about 6 points below sales. So having slimmer inventories gives more agility for retailers to test, read, and react. That's a positive. Also, supply chains are getting easier, transport costs. That should be easier for management teams to really control their supply in the face of uneven demand. But October will be a month to watch. I do expect it to be fairly volatile in terms of the traffic, promos, and also the consumer trends for sure.
Yeah, that deadline creeping up pretty quickly. Well-timed call. Oliver, we'll see how it plays out. Appreciate it.